So let's begin with the big issue. Markets debating whether low inflation is here to stay.
The big issue, here is inflation.
Inflation is peaking.
Inflation expectations have collapsed.
The Fed is still saying that there are these transitory elements.
More transitory.
Transient.
They've talked about inflation being transitory. Let's see how they characterize that at this point.
What's weighing on inflation is probably more structural.
Structural global downward pressures on inflation.
Inflation is pretty much low everywhere.
Stuck in a very low range for a long period of time.
Persistent undershoot that we've had.
Yes, low inflation is in fact a big problem for the Federal Reserve. How do we deal with inflation outcomes that have been systematically below where we want them to be?
The key question then, will the persistently low inflation help deliver a rate cut in the coming months? Joining us around the table to help us answer that question, Henry Peabody of Eaton Vance, Julian Emanuel of BTIG and Vishy Tirupattur of Morgan Stanley. Henry, first to you, your answer.
You know, I think that we're actually in an environment where we have to have a reasonable discussion around rate cuts, whether they're now or towards the end of the year. It's right now it's adult swim. This is when mistakes are made. The front end of the curve, whether it's bills to twos or funds to twos, is starting to show something a little bit more sinister under the surface. And we need to pay attention to it. Whether that's something larger, systemic, or whether it's digesting bill supply, which is also just as concerning.
Yep.
We need to be mindful of this. Our view had been that oil would actually take us into a higher inflation environment in the second half of this year. But with prices rolling over now, that year-over-year denominator effect is it's being priced out a little bit. So.
Expectations are high going into next week, not necessarily to deliver a rate cut, but perhaps to tee one up. Julian Emanuel, you came out and spoke to me early April and said, we think 2 cuts this year. A lot of people started laughing. You said September, December, then a lot of people started to follow. Now you think it's gone too far. Give us your view.
Well, we do think it's a little too far. If you go in June or you go in July, particularly June, before the July payrolls data, that really sends a signal of excess concern to the market. I don't think that the market would digest that well at all. But clearly, between the potential for slower growth and this obsession with lowflation, we call it, they're going to cut. But the question really is, and the other 800-pound gorilla in the room is, even if they cut, if you're going to go to a full-blown trade war that's going to potentially escalate in a week and a half, it's not going to matter.
What are your thoughts, Vishy?
I think the trade issue is really at the center here. I mean, there is certainly some slowing of growth in the U.S. economy, and you've seen the jobs print not just 1 month, but it is beyond that. I think there's some stuff, slowing of the economy is there. It's not as robust as it was. And then you layer on top of this the unpredictability of what I would describe as a fairly non-linear response to growth from the heightened trade escalations, trade concerns. I think that is the key point here. And so that's what we'll be looking for when the statement and the press conference next week.
Henry?
So let's just break this down to sort of first principles. Where are we? In Q4, we tried to get rates higher, and we got concerns about leverage. Bill yields traded up. It took the consumer out. The ECB can't get off zero. The Bank of Japan owns everything under the sun. We've changed to an easing bias. Southern European banks are undercapitalized, and we can't get rates higher. That's where we are. Domestic data is holding in okay. Globally, ISMs are rolling over. You have 4 negative prints in Asia. You have Germany showing a 44. So global data is being impacted by trade, no questions asked. The coincident data here is okay. If it weakens, that conversation gets a lot louder.